Hey everyone, thanks so much for joining. My name's Denise Loria. I'm the Special Projects and Operations Manager here at AFC. We have a great webinar lined up for you guys. It's in collaboration with our legal advisory member, Shepherd, and we're going to be talking about Agentic AI and how it's affecting payments and lending. Just two quick housekeeping notes for you guys. I will be monitoring the chat and the Q&A feature, so if you ever have any questions throughout the session, totally feel free to drop them in the chat. In the event we're unable to get to them, I'll drop my email and totally feel free to email me. The webinar will be recorded, so in the event you have to hop, we will be posting it on the AFC website tomorrow and including it in our weekly wrap as well. So without further ado, since there's so much to cover, I'm going to pass it over to Marari, who's going to kick off our conversation.
All right.
Enjoy.
Well, thank you so much. Thanks for everyone for joining. Welcome to today's webinar, our AFC FinTech Forward webinar series. My name is Murari Shah. I'm a partner at Shepherd in our Orange County office. Along with my colleague and partner AJ Dhaliwal, head up our consumer finance and FinTech team. We've got a great conversation today, so let's just get right into the intros for the panels, and I'll start with AJ.
Thank you, Murari. Like Murari said, I'm a partner here at Shepherd, based in Washington, D.C. Myself and Murari and Equal Practice really represent banks, fintechs, other lenders, and payments companies. And I think lately a big part of that work has been helping clients think through how to deploy agentic AI responsibly by really focusing on building the governance frameworks, updating vendor agreements, and navigating sort of the regulatory uncertainty in this space, and just figuring things out as we move along. So excited to have this conversation. Happy to be here, and thanks to AFC for having us.
Why don't we go to Vinay?
Thank you, Rory. Pleasure to be here. Hi, everyone. My name is Vinay Bhaskar. I'm the Chief Operating Officer at Synaptech, based out of New York. Synaptech is a AI-powered credit decision platform, and our mission is to drive the financial inclusion at scale by changing the technology underlying the credit decisioning. So we worked with credit unions, banks, fintechs, essentially with a target to have say yes to more borrowers efficiently and keeping the risk in control.
All right, very good. And Chris, why don't we go to you?
Hi, I'm Chris Rigoni. I'm head of partner banking at Axiom Bank. We have a good partner banking program at Axiom Bank and multiple different partners. And so building and scaling that program and managing those partners and their activities. And so excited about the conversation today.
Excellent, excellent. Reggie, can you bring us home, the intros?
Yeah, great to chat today. I'm Reggie Young, based in San Francisco. I'm chief of staff at Lithic. We're a card issuing platform that powers cards for fintechs like Mercury, Imprint, and Novo, but also a lawyer. And you can tell I'm the only in-house lawyer because I'm not wearing a collared shirt. I've spent most of my time in a product counsel capacity at fintechs, currently Lithic and Bluevine before.
All right.
You also got a vest on, which is a clear giveaway too.
It's very San Francisco.
The tech company vest, yes.
It's good to see the San Francisco's coming back. So good to see. All right, let's get into it. So this term agentic AI, it's all over the place. And I'm not sure, got to start with the basics. Make sure we have a definition of what this means and how it impacts our space and so forth. So why don't we start with the basics? AJ, why don't you tee us up and tell us what does it mean to be agentic AI, agentic payments, and how is the legal landscape developing now?
Yeah, sure. So I think it's worth, like you said, spending a minute to sort of set the table, because I think agentic AI, gets thrown around a lot, and it means different things to different people. We've had AI in financial services for years. Think about credit scoring, fraud detection, chatbots. Those tools really generate an output, and a human decides what to do with it, right? So agentic AI is different, right? So in my head, I think of the analogy, where you have, traditional automation, like setting up auto pay. You define the payment, the amount, the account, and the rules are fixed and predictable, right? Agentic AI is more like handing an assistant a credit card and saying, hey, keep the lights on however you think best, right? The agent essentially determines which payments to make, and when to make it, which accounts to use, and critically, the consumer often doesn't approve of each individual transaction because the agent already has access to their accounts. And, unlike rules-based automation, the agent adapts over time as it learns more about the user. And I think that shift from, a specific predefined commands to this open-ended delegation is where sort of this legal complexity comes in, right? So I think, the scale of what's coming is real. Several weeks ago, we saw the first live end-to-end payment executed by an AI agent within a regulated banking framework. Stripes launched agentic commerce solutions. NIST has stood up an AI agent standards initiative specifically because of the heightened compliance and governance and even cybersecurity risks involved. Um, Along with that, in parallel, we have new protocols or new frameworks that are being developed, including sort of the agent-to-agent frameworks or protocols and the agent payment protocol, to standardize how agents interact with retail and financial systems. Um, and so from the pure like financial services perspective, it's particularly exposed, I think, because we're talking about, real money, real credit decisions, and therefore real consequences if it doesn't go right. Um, and the regulatory framework that we have, think about UDAP, ECOA, the EFTA, fair lending, they weren't built with autonomous agents in mind, right? So the central question that runs, through all of it is, um, when an agent acts, who's responsible? Is the consumer, responsible because they authorized it? Is the developer who built the bot or the AI tool responsible? Is it the fintech platform that it runs on, or is it the bank that really processed the transaction? So we don't really have clean answers yet, and that I think is what makes this conversation, very timely.
Yeah, no, it's a great kickoff. So Vinay, Synaptic has been sort of at the forefront of building this. I think, the AI-powered decision making for credit unions and lenders. And I think your perspective here is going to be really helpful to the audience because you can speak to this from the product side. So AJ gave us kind of the legal overlay and some of the issues and constraints that we're working with and trying to grapple with from a legal perspective, but help us better understand sort of what the real problem is that we're trying to solve here with agentic AI.
Absolutely. I think AJ said the right context from the place where I and Synaptic kind of use it. The promise of agentic AI, of course, is to quote unquote reduce the transaction cost of credit decisioning, right? And the time and effort that goes behind saying yes or a no to a customer or a borrower in a risk regulated framework way. So um, we have seen plenty of use cases, Murari and Adrian team, where agentic AI stitches together the workflows and takes the action to execution. So that's kind of a game changer. Customers or borrowers or members of the credit unions won't have to wait till the branch opens the next day, and the agents would be able to cover some of the actions or stipulations and complete the workflow and render the decision within the same day.
Yeah. So, but it's not just speed, right? We're talking about you actually
100%.
have more throughput, right? Too.
Oh, 100%. It's not just the efficiency piece, Murari, it's the expanded access. The time to speed is a critical component to it. The agents are able to kind of find out, especially the underserved or deserved borrowers, and provide them access to credit right when they ask for it.
Sure, sure. And I mean, we've talked about AI now for a few years and probably longer for others,
Yeah,
but whether it was machine learning or what have you.
yeah.
But take us through sort of the evolution a little bit. What is meaningfully different about AI and agentic AI as it's been deployed now, as compared to sort of the early years of machine learning and the like?
No, absolutely. I think you touched on the right point, and AJ had alluded to that. It's not new. The AI and the machine learning framework is not new. It's been running for decades, 1960s and onwards. The evolution of this was first in the predictions, how you leverage the machine learning to predict what the risk of a borrower is, for example. Over time, the machine learning evolved into a neural network space, as well as now the large language models, which are able to generate um, um, automatedly some complex images, texts, videos, audios. Those are specific large language models. Call it a Gen AI space. The agentic AI or the AI agents essentially stitch together the workflows that humans would have generally done to take it forward. So one agent analyzes, perceives, acts, hands it over to another agent, if it's a multi-agent step workflow, to a third agent, interact with the borrower to complete a seamless journey and deliver the product. So it's an evolving space. In my view, we kind of seeing agentic AI is being leveraged for automation, autonomous workflows, and then of course the value that they create in the quality of the decision.
Yeah.
And there are two vectors, Murari, besides the automation where this quality will going to kind of come from. One is agents, because they have unrestrained data that they can kind of tap into as they triangulate the information, or the lack of cognitive biases that humans would have. That plays an important role into it, which gives the superior outcome of the decisions,
Yeah.
or same outcome but faster to the customer or the member.
Yeah, I'm sure we'll have to talk a little bit more about bias, especially in the financial services context, and how it's sort of maybe counterintuitive compared to where some of the
Yeah.
regulators are at the moment. Why don't we do this before we turn to the others? Give us a quick, concrete example of how agentic AI might be relevant to, or just in sort of everyday life, how it might work for some a task that we may spend 45 minutes doing over the course of a week, and how agentic AI could solve that.
Absolutely. I think the very relevant and concrete example that comes to my mind is on the stipulation. So assume a bank or a financial institution branch kind of closes, shuts down by 5 p.m., right? And I'm looking to shop for a car. I go into the dealership, I apply for it, the application submitted, it's hitting the bank's branch, the decision's coming out, but guess what? The decision comes out to say income needs to be verified, right?
Okay.
Now, I would rather wait in a normal circumstances for the next day somebody to look at all the documents that I've submitted. Fast forward, if it's an agentic AI use case, the agents are going to kind of parse, interact with different APIs to verify the income that I submitted and submit the decision right then and there. So while I'm sitting at the dealership, I'm not waiting for the branch to open next day. The income's verified, the dealer approves the loan, and I just walk out of it with the car.
Yeah, no, it's good. It's always nice to get a new car. And any as someone who's worked for an auto finance company, decreasing the time set in the F&I office is job number one. So I completely get it. Great example. So Chris, let me turn to you. The banks have been all in the news of late, launching AI initiatives, including potentially getting into the political headwinds a little bit in terms of who they're linking up with in Anthropic. But from your perspective, is the hype real? Are the banks really stepping up and standing up agentic AI and sort of being sort of almost leading edge with it, as we would, the news would tell us they are?
Yeah, so I'm going to give you the consulting answer and say it depends.
That's the lawyer's answer.
It depends on the bank, right? I think you have some that are well positioned to be on the leading edge. and that have, the development capability and the internal capabilities and also the capital to invest, right, to be able to be on the leading edge of this. I think that AI is a little bit different in that respect, in that I think even community banks and regional banks have the opportunity to do it. I think they don't, on all cases, have the expertise to be able to manage the oversight and governance. And there's a little bit of a fear factor there, right?
Sure.
It is okay with the regulators right now, but maybe it won't be in the future, or there may be some things that happen that we couldn't anticipate that would, cause some problems and issues and challenges, which we can all anticipate with innovation. I think it's the same thing that happens typically with banks and innovation is the banks want to push innovation, but they have to do so at the speed of the regulators and how they will allow them to do so. And so as long as we keep going back to the guidance and keep going back to the principles that, create a safe and sound environment for financial services, I think that we'll be doing the world a service to do that, but also implementing AI to be able to take advantage of this technology. I think the places where it is most applicable are probably not even agents, to be honest with you. I think the majority of banks would do well to, have a level process map across the organization and understand what's happening today in each of these processes, especially on lending and payments, and then be able to increase the efficiency of those processes even before implementing any agent.
Yeah.
One thing you don't want to do is you don't want to do a bad process faster or more. And so the other thing too is redundancy in processes and antiquated processes that maybe they thought was needed but is not needed anymore. I mean, there's multiple different components to taking the first step, which is what are we doing today? And when I say what are we doing today, not the high level process documentation you normally see, but down to the nth level of detail, what is actually happening in these processes, and then how can we translate that into an automated process? And whether it's just simple automation or RPA, or even implementing an agent in some circumstances, I think that the bank could benefit from that. And there's areas where they're definitely looking at that, right? Like BSA is probably a really great example of where I've seen multiple different demonstrations from vendors in the area, that have some sort of transaction monitoring component to say, how can we decrease the false positive of alerts? How can we make, the folks that are actually working these alerts initially even have a less work to do because they can focus on those alerts that actually would potentially become a case. And then further than that, how do we turn a case into a recommendation from an agent to say, hey, we're recommending this become a SAR or not. And then even writing that SAR in a templated version that adds all the information that's necessary and can be used and just reviewed by a human and then moved along in the process. So there are significant cost savings and scalability that would go along with a lot of these capabilities. But again, on the backside of that is that every bank has in the back of their mind that they're going to have to go in front of the examiner and explain how these decisions were made.
Sure.
And when you don't have a human, to AJ's point earlier, when you don't have a human that are doing these processes, there's not someone to blame. There's not someone to point at and say, okay, well, why did you make that decision? And so you have to build that explainability into these models to be able to have these breadcrumbs that you can follow to say, okay, this is why you made that decision. This is why this outcome was, either positive or negative. And that goes along with the training. But then you can go to the examiners and say, hey, look, this is how it made the decision. We reviewed it. We did a sample size or whatever, the oversight looks like. And this is how we continue to train the model. Because no matter if it's an agent working or a human working, everything's not going to be 100%. There are going to be mistakes. There are going to be issues and challenges that come up. And so it's not in that challenges will arise. It's how we handle it.
Right. Yeah, it's funny. You said a couple of things that were really interesting. Making a bad process faster isn't necessarily the goal. I think there's probably sort of two sides to that. A bad process, let's call it an inefficient process, not one that sort of renders the wrong answer, but one that's inefficient. It is fast. It is better maybe for that to go faster. to some degree. So I think that there is a balance in getting the regulators. And one of the other things you mentioned that I thought was really interesting is that, you got to be able to explain it to your to the regulator or the examiner. And for all of its casual users of AI these days, I mean, sometimes you just ask the AI, right? It's like, all right, how'd you do this? And it's gotten so good in some realms, and I suspect it'll get better that the result can come with the answer to some degree and be shared with the examiner. And with any luck, that's the direction we're probably headed, I think. But we'll see when we get there. Last thing before I turn to Reggie, let me ask you this, Chris. If using the example that Vinay used with the auto dealership, where the person comes in after hours. I don't know if you guys have an auto finance indirect model at all, Chris, but let's assume you do, like many banks do. And I mean, how would you be able to handle an inquiry that comes in at 8 p.m. at night from the dealership? Would you be able to apply agentic AI to that currently?
I mean, I think the question revolves around data and availability, because all of these processes are built around the availability of data to be able to have an agent process what's necessary to make the decision. And so I think what you're going to find in a lot of things, especially communities and regionals, is that the data is not in a place, both in strategy and in infrastructure, that it needs to be in order to properly take advantage of agents at scale. And so if that were a targeted process and we were to build that and put the data in place to be able to have that as an outcome, then yes, we could do that. But again, it doesn't start with implementing the agent. It starts with, okay, what does the agent need in order to make this decision? And let's make that data readily available to the agent to be able to do that. What systems is it coming from? Do we have access to it? Can we export it to the agent can access it? Is that a manual export? Can we automate it? I mean, there's a lot of, that's not kind of a loaded question, right? Because could we? Yes. How long would it take? That's a question, right? Because there's a lot of underlying processes and things that have to be set up to be able to support something like that. And that's within the agent, right? Regardless of the use case.
Sure. Well, all right. Well, let's get into some use cases. I think that's probably the next best place. And I know, Reggie, you've got a front row seat in the card space. So give us a little perspective, from the Lithic point of view, a card issuing platform. How are you seeing fintech clients actually deploy agentic AI today, and where are you seeing the most demand?
Yeah, it's definitely very early. I think that's one common theme anyone you talk to. They're like, agentic payments is in a lot of headlines, a lot of LinkedIn posts about it, but like most use cases are sort of pilots. Let's test this, see how it works, see what really happens. I think we are seeing good demand from fintechs. We're even seeing demand from some banks that want to offer agentic tooling to their retail customers. Like kind of interesting. It is widely dispersed. The interest in it is pretty widely dispersed. I think in terms of practical use cases, there's been a lot of really snazzy demos, like Shopify, OpenAI, I think Stripe. They've all put out demos that's like, I want a new pair of shoes. Like ChatGPT, can you help me pick the color and find the cheapest price? But it turns out people actually get dopamine hits from shopping. So the like consumer adoption of agentic payments, I would expect is going to be a lot slower. I think the more interesting use cases and where I would kind of bet the future is going to initially go, there's a lot more uptake and more like almost business processes. Like I like to use the example of a travel agency that needs to figure out a traveler's plan and book that travel. They can use an AI tool to kind of figure out, okay, here's what this
The
person
tour
thinks.
spot for me here.
Oh,
Someone just got off the plane, so very delayed. So yes, I could have used AI the last 24 hours. That would be
yeah,
nice.
it helps like that sort of like business process, right? Exactly like that. It's a travel agency, book the stuff. Hey, have an agent that goes and books everything for them. Now it's not really the traveler that's getting benefits, it's the business, and they're reducing their OpEx. So I think there's a lot of that. There's a lot of talk around microservices, agents doing work for other agents and paying other agents. That's also a very early thing. But I think some of the initial sort of traction we're seeing is in that sort of like SM or like business process area.
Yeah. So do you have a situation where an agent authorizes a payment based on whatever it learned along the way, or a business process that's sort of all agented out, so to speak?
Yeah, we're definitely supporting some like early kind of pilots. Again, everything's like very early. There aren't really a lot of headlines, not too many generally accessible, but a lot of exciting actual use cases in sort of testing pilots in the works.
Yeah, and I'm assuming you've got an optimistic view of where this goes.
I do have a fairly optimistic view. I think there's a lot of talk of like the risks, and I think it's a very valid thing that you need to keep an eye on. But there's theoretical risk and then there's practical risk, and I think one of the things I'm really excited to see is like there's a lot of concern around liability, and like if an agent goes rogue, but like, is that actually going to be a risk that manifests, or is it something that we're worried about in theory? It's something we need to be prepared for and have a sort of thesis on how to deal with. And of course, as frameworks develop more, that'll become a more clear thing. But yes, I'm cautiously optimistic on the adoption of agentic payments.
Yeah, yeah. Well, I'm excited to see what you guys come up with. I mean, there's so many areas where one the other day, you hear a lot of stories about elder abuse and so forth and things like that. It's like, well, maybe grandma needs an agent, So anyway, let's keep going. Vinay, let's how are you? What productivity gains are you seeing in workflows?
Yeah. In our interactions with financial institutions and the use cases that I highlighted, Morari, we are seeing very measurable gains in terms of, say, the same day approvals, the
Mm-hmm.
time the underwriters don't have to spend in checking certain information, which they would spend hours to decision, the higher pull-through rate overall. So all in all, it's expanded access, the customer/member experience, as well as the higher fundings, all within the risk guardrails that a lender will set up.
Okay. Are you do you think that there's, besides throughput and so forth, are you finding that if customers are wanting to do certain actions and sort of authorize them, but maybe the company or the card, whoever it is, isn't quite yet there? Are we seeing sort of an opportunity where sort of customers that really do want to forge ahead on this are going to be
Yeah.
able to do that?
No, absolutely. I think it's an evolving space, Morari. So human in the loop, as we have seen, continues to remain an important aspect of how financial institutions adopt this technology. It,
Mm-hmm.
of course, depends upon their risk appetite. It depends upon the use case in mind and how critical it
Mm-hmm.
is, right? Case in point, if you were to take an agent to fund 500,000 for home or mortgage or home equity line of credit to complete the flow, you would want the human in the loop to make sure that exposure is controlled. So it's an evolving area for the low-hanging fruits, which are automation of autonomous kind of flows.
Yeah.
These are straightforward, easy. But then for
Yeah.
the other cases, the human in the loop not only kind of verifies that the agents are doing what they ought to, but also administer uh, the edge cases or the escalations that humans have to take care of.
Yeah, yeah. And I assume then even in the audit process, the AI is involved too, right? In sort of confirming and validating that it was done according to uh, the intended use.
100%. I think we can't stress upon that fact more, Morari. Audit trails explainability is a key to any financial institution adopting this technology, right? So now that agents are going to act autonomously, audit trail explaining what agent was supposed to do, what they did, how much time they took to do it, and what was the final outcome. If you have all of it documented and you can monitor, it's going to be a very controlled process.
Yeah. So Chris, you talked a little bit about banks and kind of the use cases that you guys are seeing, certainly back office and certain payment flows, and maybe at some point into some of the lending space and so forth. But as Vinay said, we're probably not getting rid of humans anytime soon in the AI space, notwithstanding the rhetoric that's out there that's associated with that, and there's probably good reason to be concerned about that. But where do you think, from your perspective, what are you most excited about from a bank perspective in terms of use cases for AI?
I think the use cases in the back office are probably where I'm most excited. I think, it's interesting because I have a few friends that are in the AI space, and they are always, asking me, oh, wow, we can do like financial investments and, manage your own portfolio. And there's so many. And I was like, hold, pump the brakes, man, pump the brakes. Like, if you're making financial decisions for customers, and even if they opt in, what happens when the agent chooses poorly or the market does something that no one expects? So there's a lot of things where I think customer facing things are still a little bit away, and it's going to really depend on the customer need and adoption rate and what the customers are asking for about how we approach those situations. The back office, though, I think are the areas where we can find the most efficiencies and scale. And so, like I mentioned, BSA and mentioned, operational activities. I think, namely, just having exceptions automatically delivered and working those rather than looking for them.
Yeah.
So situations to where you have defined parameters that an agent can easily go in and say, here are the things that don't meet the criteria, and push those out to a human in the loop that's working those. Because right now, I mean, in banks, big and small, doesn't really matter the size. There are people that literally sit there every single day and look for exceptions manually in a lot of cases. And so those are very, very good use cases for whether it's automation or PA or an agent. And I think what I love about AI is not necessarily the implementation of agents, it's that it has been and will continue to be a catalyst for the financial services industry to look at its back office in a new light and say, okay, number one, we really need to figure out what's going on there and what's actually happening. But number two, there are areas where we can put in automation and in some cases agents to create a faster process and create more scale. The other thing that I would say is that I think this, from a competition standpoint, puts the smaller banks on a level playing field with the larger banks in some cases, because the scale that you can reach and the customers that you can reach and how you can go about doing this, if done in an appropriate manner, and obviously a compliant manner, you can really compete with the larger banks, even as a community bank in some markets, or even a regional bank in some markets as well. So I think that's the main exciting thing for me, is being able to create efficiencies and scale at a level that really, I mean, from a technical and a capital perspective, haven't been possible.
Yeah. So Reggie, let me ask you one sort of just following up on this dopamine kind of reference you made. One of the things we see with agentic use cases, just your normal chat, the old style, which is probably like 3 or 4 years ago, chat bot that sort of like sat alongside your financial institution bank and sort of said, hey, do you want to do this or do you want to do that? And sort of walk you through the steps on how to do things. It seems like we're at a stage now with agentic AI where you can get a lot more sophisticated, and it can be educational in a sense, like, hey, I think I want this type of a mortgage. Is that a good idea? I want to use my credit cards to build up my points. I don't know. I'm just making up examples here. Why should I do it? And I think the way I've seen agentic AI work, and I'm curious whether this is actually sort of some of the things that you guys are considering, is it's options, it's hedging, right? It's not necessarily making decisions for you, but it's prompting you to make decisions based on more fulsome information, based on the education that it's providing you as you go along. So the chatbot, it's a much more robust chat, as opposed to you want to change your name on your account or your password, and walking you through sort of a really simple step by step on something like that. But for those of us that use it in a variety of spaces, it seems like there is a certain level of repetition amongst certain financial services, but each person's individual circumstances may take you down any number of paths. And it's not an if then else. It's like, it's this weird permutation of so many different options. And it seems like AI with an agent sort of situation, maybe you've seen it with cards as well, could potentially um, make that a decision-making loop where it's an active engagement with with the human. I don't hear agentic AI talked about in that manner. Is that something that you guys talk about?
Yeah, I think that's right. Matt Brown has a really good piece talking about AI and the impact. One of the impacts of fintechs being that it moves the frontier of risk because you can get into like the easier risk cases are easier to automate with AI and lower OpEx, and now you can focus on sort of the fringe cases. I think that applies to payments and everyday use too, like with agents helping for agentic payments and like any kind of AI context, you can get deeper into like what you're just saying, the sort of like I can make better decisions because I can get more information and it takes me less time to become more informed. So yeah, I think that's right. I think we're seeing a lot of interesting use with um, yeah, the engagement with that sort of spend, that human in the loop spend. I think this has already been alluded to, but one of the best ways to oversee agents is other independent agents. So you can almost have like an agent in the loop checking your agent's spend. And like one of the reasons Lithic is we're really excited about this trend is we've what we call authorization intelligence. And so you can think about card controls, authorization controls that used to be like is this card being spent in North Korea? Deny it. That's a very like binary sort of decision. But now like our platform enables the ability to kind of like you can feed in unique data. Like you can have an agent that says, wait a minute, this seems outside of the agent's perspective. You can also set rules like there's complexity you can introduce there around like trigger a human involvement to bless this, which there's a lot of sort of card network frameworks like 3DS is a good security framework example of the card networks are particularly well suited because they have this tokenization framework, which we can get into. I could talk about that for a while, but
Yeah.
they're all building towards this like new set of tokens for agentic spend that says, hey, this agent is blessed with this authority, and here's the token that represents that liability shift from the network. I think we're a little far out from like total adoption of that, but it is like one of the many ways in which you can kind of build new, interesting, flexible controls for when is the human pulled in, under what circumstances, and like as we were just talking about, like it's good to articulate and make sure the AI knows like the scenarios when they need to escalate.
Yeah. Well, good. I'm excited for what you guys come up with. But there's always the law and regulation that's here to sort of rein us in. And it's hard to believe that we've got things like the Clarity Act and the Genius Act sort of like, um, coming to fruition because so many of the laws that sort of apply in this space seem fairly antiquated when you talk about AI. Um, but they're still the law. So AJ, why don't you tell us kind of what exists, how does the existing regulatory framework map, if at all, to agentic AI? How can we sort of think about, things like UDAP as it relates to uh, the use of agentic AI?
Yeah, it's my turn to play the heavy as a lawyer. I think the honest answer is that the existing frameworks apply, but imperfectly. And I think regulators are going to be doing a lot of sort of shoehorning for a while. I think on consumer protection, you talked about UDAP, is essentially the starting point, right? And regulators have been consistent that companies remain responsible for consumer harm caused by automated systems, right? So if an agent produces an outcome that's unfair, deceptive, or abusive, that's actionable, right? And the fact that a machine made that decision doesn't really give an institution any cover, right? On fair lending, ECOA still applies to credit decisions made by or influenced by AI systems. And I think critically, if your model can't explain how it reached a decision, you have an adverse action notice problem under Reg B. And you have to disclose specific reasons for denial, right? So if your model produces decisions that can't be translated into specific factors, you can't provide a compliant notice, right? It doesn't make any sense. And I think that's a very live issue, sort of regardless of where the current federal enforcement posture is or on fair lending and kind of where it sits more broadly. I think with the EFTA, I think that's sort of where it gets particularly interesting. The EFTA is, of course, the federal law that governs consumer rights and liability around electronic payments, including debit transactions and ACH. So if an autonomous agent initiates a payment that a consumer disputes, right, the institution has to determine whether that transaction was authorized. And the tricky part for companies is that a consumer's general delegation to an agent may not legally authorize each specific transaction that the agent executed. For example, um, if the agent pays for a consumer product or service and the agent debits the savings account instead of the checking account, the question is, did the consumer actually authorize that payment under the EFTA? And I think that the analysis is genuinely hard because the general rule under the EFTA that limits consumer liability for unauthorized transactions may simply not apply cleanly to agents where agents are involved, right? Um, and then I think sort of at the higher level, there are gaps that the existing laws haven't really filled, right? Um, Agent authorization standards, agent identity verification, the no clear rules, yet for determining where or who bears the loss when an agent causes harm on multiple parties, right? The agent developer, the platform, the financial institution, where they're all involved. Um, so I think in those contexts, they may require new regulation, new guidance, or courts sort of grappling and working through, the first wave of use cases.
Yeah, very good. Chris, just from the bank perspective, again, you're dealing with fintechs that are on the cutting edge, maybe here. What's your approach to oversight to ensure sort of regulatory, the regulatory guardrails are heeded?
Yeah, I think that the approach largely is the same that we've always taken, right? We have a risk framework that we've developed for each product set, each fintech, each partner that's very specific to them. Because partner banking is a little bit of an anomaly in the financial services world because, commercial, there's pretty set terms and templates and everything, small business the same way and retail the same way. For fintechs and partner banking, each fintech that we partner with could be very different in both who they serve and the products that they offer. And so the risk framework that we develop for them, the profile and how we provide oversight is also very different. I think one of the things that I think we have to work through is even if a fintech implements AI in an area that's not materially risky for the bank, because it's AI, is that something the bank needs to pay attention to simply because it's AI? Because I think the attention that's being paid to AI at the moment, especially from the examiner level, is that, hey, you got to have explainability, you've got to know what's going on. And so when you reach down to the fintech level, even if there's a process in their back end that is not a material risk to the bank and not something that I would necessarily oversee on a day-to-day basis right now, if they implement AI in that area, then does that mean now I have to, right? And so again, I think we always have to take the approach of, here are the risk metrics that I'm measuring. Here's the oversight I'm providing, both from a compliance perspective and also from an overall risk perspective. And then here's how I'm overseeing that activity, whether or not it's AI. And so I think we just have to, when that is being implemented, the bank being aware that it's being implemented, how it's being implemented, how it's being overseen by the fintech, and making sure that that oversight is occurring, I think is just the basic level. But it really depends on where that fintech is placing that. Now, if it's credit decisioning, that's a huge place that you would obviously want oversight over. If it's a back office process that is going through all of their clients and then making offers to some of them, like, maybe not, depends on what the offer is, depend on, a bunch of, different components. So it really depends on the area.
Yeah. Yeah, and I'm fairly certain that, even that, you're going to have the fair lending agent that is the sort of the heavy for that kind of stuff. I mean, that's just a matter of time. It seems like compliance in particular, agents might be the best initial cut to make sure that your oversight is good. So with that in mind, then let me turn to Reggie. What's your sense of how AI has changed your ability, or how you think about complying with various consumer finance laws that are out there?
Yeah, I think part of the reason I'm excited for Vinay on this is because I think lending is like the thorniest area, which most of the AI stuff we're seeing is more on the kind of card payments, less the lending space. Yeah, I think as Chris was alluding to, it's about transparency and everybody knowing how AI is being used everywhere. Like, if your marketing team wants to use AI to draft content, great. We're not going to worry. I mean, if it mentions the bank, if it mentions us, like we got to review all that, the kind of standard collateral rules apply, but other more kind of core functions, like giving an agent, card access is like a huge area where we want to know what are the controls, what's the kind of oversight, what's the reporting and auditing processes there. So, and then generally, we were kind of talking about authorization controls and authorization intelligence. Like there is fortunately in the card space, there's a lot of good infrastructure for how you control spend and how you control those payments. And so that's what, again, I'm a cautious optimistic on cards and agentic payments, in part because the card networks have built this like incredible messaging system. And it includes the ability, if you're working with like a modern card platform like Lithic, the ability to really dial in and limit the exposure. So, yeah, your AI may try and buy 10 pairs of shoes instead of one, but like that card's actually going to have a spend limit on it and it's not going to be able to execute that transaction. So there's various sort of practical limits and guardrails you can put in. But again, it requires that those conversations up front to ensure that everybody's aligned on how it's being used.
Yeah. So let's talk about what happens when it does go wrong. And maybe Chris, you have a thought on this. I know it's an age-old question for banks in terms of who gets left holding the bag. What's the current thinking on not just agentic payments, but just any type of automated kind of decisioning that happens on the customer side as opposed to the bank side, and who's responsible for that?
Yeah, I think that, to what AJ alluded to is that, all of those things still apply. And so, one of the questions could be asked to say, okay, well, what if an agent operating on behalf of a customer makes their account go negative, right? They're authorized to pay these bills and do these things. And, whether the customer realizes it or not, that's going to take their account negative, and the agent makes those transactions and it takes it negative. Okay, well, the customer's going to be like, I didn't do that. The agent did that.
Yeah.
Never mind the fact that they authorized the agent to do that. So it's one of those sticky, kind of strange situations. I would compare it to Zelle, right? So when Zelle came along and customers were educated about Zelle and how it worked and everything, they began to use it, and I think it was a great thing. And you could pay someone instantly, and they got their money, and but then, of course, fraud is not far behind, right? And so eventually people realized, hey, I can trick somebody into sending me a Zelle payment and never actually give them the product they're buying from me. And so that became, a rampant issue. And in a lot of cases, these customers, because it is a bank offered payment capability, they thought, well, the bank should honor this as fraud and that they should cover those costs. And so the banks were in many cases left holding the bag. And so I think the conversation of customer education versus what the bank's liability is versus the customer's liability and the decisions that they're making is something that we'll have to work through, just like we had to work through with Zelle.
Yeah.
Educating the customers. Are you sure? You don't know this person. You're about to send them $200. They may not give you the iPhone. So, make sure you got the iPhone before you send them 200.
It seems like that neural lace that we were talking about needed to come before the Zelle. So you made better decisions before you sent the money to begin with. But yeah, that's yeah. Okay. Well, that's helpful. It's just to sort of clean up this point a little bit, AJ, what is the current sort of if there's a dispute, and have we started to see agentic payment disputes or just agentic disputes in the financial services, and how are those being handled?
Yeah, I think to Reggie's point earlier, I think we're really in sort of the infancy of all of this, and if we're not seeing the actual use cases play out in public and not in sort of like the pilot phase, we're likely not going to see a large use case where we have customers currently sort of disputing charges. But as I think through this, it's not just high level. It's not just a consumer who's going to be exposed when things go wrong, right? You have merchants, lenders, and vendors, they're in a tough spot too. I think the obvious use case that we've talked about, is where a transaction goes through, the product ships, or the service is rendered, and then the consumer comes back and says the agent wasn't authorized, or acted out of scope. I think here the merchant, right? We talk about, the lender a lot, but the merchant in this case is probably absorbing the chargeback has already lost sort of the goods and services that went out the door, right? So that's one sort of result for that sort of class of actors in this space. And I think the fraud risk, essentially runs both ways, right? You have bad actors, maybe not now, but they're thinking through things and piloting their own agents or processes. I think they're going to look to exploit agentic systems before the industry develops really safe standards, right? So new fraud schemes with agent commerce may cause banks and merchants sort of increase losses from transactions that later prove fraudulent. And plus speaking to a lot of banks, one of the things they consistently talk about is sort of the significant number of customer service issues that they're going to have, and I don't think they're really ready for that complaint onslaught, right? Or even the reputational damage around agents going rogue or having to sort of pay out certain consumers or their borrowers, right? Um, and then one thing that comes to mind, just because I see risk everywhere as an attorney, is this idea of a kickback problem, right? I know we talked about this a little bit in a prep session. If a developer builds an agent that's supposed to find the best lending product for a consumer, what stops that developer from having sort of a commercial arrangement that steers that agent towards a particular lender, regardless of fit, right? So, we have these sort of like issues that are yet to play out, but they're in the bucket of things that our clients are certainly thinking about.
Yeah. Um, Always interesting conversations, and I can see we're already running up against the clock here. But Vinay, let me ask you, sort of, as you're thinking about compliance, what kind of keeps you up at night in terms of making sure that you guys are able to continue to produce the things that you're producing and sort of really bring us along on this journey for all things autonomous. But what is it that sort of gives you the most pause, and how do you deal with it?
Absolutely. I think there are a lot of things that keep me up in the daytime and I sleep peacefully at night. But the compliance piece of it is a table stakes for us, Rory. And as all of us have said, Reg A through Z, we ensure that it's complied with. And we monitor the outcomes, fair lending, EQA, Reg B, whatever is needed to make sure that it complies with all federal and state regulations. When it comes to agents specifically, our experience has been that agents need to have a very structured scope. And that's where the compliance will start with. And what I mean by that is if you enable the agents to operate in a very structured lender's specific context, they will act in a way that you design them to be. And that involves not only the data that they are acting on, but also the risk appetite of the lender, right? So that there are no hallucinations going to the public sources and trying to fetch the answers therein. So that's the guardrail that we kind of keep in. The other, which I had touched upon, was the audit trails. We establish very explainable audit trails, handoffs between the agents, laying out what they were expected to do, what they did, and then we kind of continue to monitor. And last but not the least, I think the most important thing I'll say is that we promote every financial institution adopting this to have a very strong AI governance policy. And it's it's often said, but not executed well enough. I can't stress enough on this to say, have your risk management policy around the AI that has the monitoring frequency, who is accountable for it, and then what outcomes you are trying to kind of achieve.
Gotcha. Well, let's get to the sort of the lightning round, if you will, because I think you guys have all given us lots of food for thought. But I guess I'm curious, sort of where the future of these AI-driven transactions are going to lead us, and I just kind of want to get the group's sense of where we're headed, what we should be looking out for going forward, and how that might play out for us. So when we talk about agent-to-agent communications in particular in financial services, we sort of alluded to it along the way here, but are we at that point where my agent's going to negotiate with your agent to get a better interest rate or what have you? I mean, where is this headed? And maybe I'll start with you, Reggie.
Yeah, I always love the headlines about people who get discounts from a chatbot that then the company has to honor. So I'm a little skeptical of like the agent to agent negotiations over like a really critical, like over a mortgage or something. But I think there is a lot of agent to agent sort of commerce and communications happening. Again, it's all kind of early pilot test. Let's see. I think there's a lot of activity sort of like in engineering in the engineering space where people are building software and they need to pay another vendor to launch the thing. And so we're already seeing like good activity there in the agent to agent negotiations and payments and whatnot, but it's still quite early.
Yeah. And AJ, what's the regulatory view from all regions, whether it's state or federal, including our more active states? Are they along with the program, or are they gonna throw up roadblocks, do you think?
Yeah, I hope you don't end with me. Maybe get one more question after this, because
Yeah.
I think that, I think you're right. The wild card, because we know that, the administration at the federal level has kind of opened the gates and said, develop, 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 and maybe they'll rein it in like they're considering doing in the public sector. But yeah, the wild card is really the states, right? And the last thing I know a lot of companies want is another patchwork, right? And I think that's kind of where we're headed, right? Especially around fair lending. If the federal government's not going to do it, the states are going to pick up the slack, right? We've seen, New York, California, they've both shown a willingness to move ahead on, ahead despite federal guidance, when they see gaps, and there's certain exposure, right? I think agentic AI generally is certainly a place that they want to get a foothold in. That's for sure.
Yeah. Well, let me offer up to the group for any sort of final parting thoughts as before we close out here. Chris, any thoughts sort of as we press ahead and go forward, or things we should sort of keep our eyes out for?
Sure. Well, I think, just to kind of answer the where this is going factor that, Reggie spoke to a little bit, I think the exciting part is what we're already seeing in payments is payments becoming a background activity. It is not a conscionable decision of a consumer to make a payment. It is something that happens as part of everyday commerce in life. And it's not, they're getting a card out or cash out and making a payment. Those are things that are slowly going into the background to where the payment is not something the consumer has to think about, which we can argue if that's a good or bad thing. But that seems to be what's happening, that, you can have one-click buys with Amazon. You can order things from Target or Walmart or anything, have it delivered to your door, and the payment's just something that occurs in the background. I think lending is getting to be the same way. You get to a situation to where you're not able to pay for something, or you get an offer to say, hey, instead of paying full price for this, would you rather make 4 payments of $25, right? I mean, those are things that are just happening in the background that are just spontaneous decisions by the consumers. And I think we're going to see more of that as agentic payments and lending continue, because it's going to go further and further into the background. I think the thing that we have to be mindful of is that the best interest of the consumer has to be at the root of that, right? Yeah. And so whenever a lending decision is made or a payments decision is made, the best interest of the consumer has to be at the root of what we're trying to accomplish. And whether it's an agent making that decision or it's a financial advisor making that decision, we need to make sure that we keep that as our North Star.
Yeah, makes sense. Well, I see we're at the top of the hour, so I'm just gonna pause for a second.
Like I said earlier, we're going to be recording this, so it'll be posted on the AFC website tomorrow and included in our weekly wrap. But thank you everyone for joining. It was a great conversation.